Welcome to Total Money Management. We're back with Steve and Tom, and I'm Jacob, and we've swapped seats.
It's Innovation Nation, mate. Innovation at Total Money Management.
You can't tell us that we don't do anything new.
Mate, we are surprises every week.
It's Elon, China, property, and us moving around. Anyway, I just wanted to say cheers, fellas.
Cheers. If you can't see what we're doing, we're just going to smash a bottle of Pinot Noir, courtesy of Tom. And it's a good drop, but we promise we'll remain sober.
It's a great drop.
Well,
and it's been fantastically green this week.
Mate.
Yeah, when Steve's posting in the members chat, going, Bitcoin's up 10%.
You know what's been a good week?
Unbelievable.
Mate, I went and checked, right, because, it was a good week. And I thought I'd have a check, right? Aussie market, all-time high. US market, all-time high. Bitcoin,
all-time high?
This time last week, remember I said, what's Biddy? And you went 180?
16 or something
118.
Yeah.
And,
like
and I looked today
187.
and it's 120.
Yeah, that's a lot. It's very close to 200 Aussie.
Yep. So
wonderful.
gold
It's worth it. Is it
gold
worth
is
it?
treading water. Oil is treading water.
Digital gold, mate.
Stop it, Tom. Stop it.
Digital gold.
Oh,
Digital
All right.
gold.
The week that was.
what was it?
Trump hits Putin. Ukraine
hits
gets
him?
weapons. 50-day deadline.
Yep.
It's all happening. China, Brazil in the firing line.
So just Steve. So I've got this right. Putin's was the good guy, and now he's the bad guy.
When was he the good guy?
He was the good guy because
For a bit.
in
Trump's mind.
I'll give you the long story
in
the
Trump's
short
mind.
story. The short story is Donald Trump thought that Donald Trump's mindset is like a real estate guy, right? Because he's a real estate guy. He's also like the mafia. So you've got to look at Donald Trump as a mafia boss. Family's loyalty, right? So that's why he had Ivanka and Jared,
literally
right?
the Don.
So they're really into nepotism, right? Because what Trump is saying is the only people you can trust are blood relatives, right? Everybody else is not trustworthy. And it's like the mafia, right? The only people in the mafia are family, right? Family above everything else. So that's the way that Trump thinks. Now, what he also does is thinks he can negotiate everything, right? Everything's just a matter of negotiation. And he's kind of right? Because, very few people say, I'm going to stand on principle and I'm immovable on it, right? He thought that he could go to Putin and basically sort of sell it as like, dude, come on, here's what we're going to do and it'll be really good. But that's partly because Trump doesn't understand politics. He gets a sense of power, but he doesn't understand politics at a national level. And you see, that's what democracy is about. Democracy is about saying it's not what Donald Trump thinks. It's about what's in America's best interests, right? It's not what Putin thinks. It's what's in Russia's best interests. That's why Putin continues to rule, because there ain't really a democracy over there, right? So that's where Trump has now run into trouble. And the other issue too, which is quite important, is the Americans have said Russia's no longer a threat militarily, right? Because Trump said, I'm going to roll into Ukraine, I'm going to knock it over in 3 weeks and I'll be running the show. Here we are 3 years later and he's actually made nothing. The Americans assessed and said, even before that, they said, Russia's a declining power. The problem's China. We got to focus everything we've got on China because they're rising military power.
And the lockhold they have on trade.
Yeah, and they threaten America's dominance, right? Hegemony. So that's what the idea was. Let's go to Putin and let's be friends with Putin against China. So it's the old isolation policy, right? In the 70s, Nixon went to China and said to the Chinese, right, who were communists like Russia, hey, why don't you, come on board with us against Russia, right? And now the roles are reversed, where the Americans have gone to Putin and said, what they're trying to do is get Putin on board, but Putin's not buying it, right? And so that's where That's where Trump has now flipped by saying, well, obviously Russia's not interested in coming on board with us. Okay, all bets are off and we'll arm up Ukraine.
Mm.
And that's what's going on.
Well, it seems like a bit of a flip, though. It's like he didn't get his way, so he's flipped to Ukraine. But what's the benefit there?
Well, the Ukraine are now getting supplied weapons. Germany is supplying weapons. I suspect at the non-public level, right? So the backroom
Behind
chatter
the
will be,
scenes.
if the Americans are going to get in and support Ukraine, all right, we're going to get in there too. And the Europeans are actually stepping up on that. It's a bit slow, but they're stepping up.
Well, yeah, the UK and Germany were stepping up and kind of were waiting for
Absolutely.
the US to make a decision.
Absolutely. And the French the UK and Germany this week made an agreement which said we'll help each other militarily if there's any trouble.
It's the
Right?
first
So it's a
time.
little bit
First
late.
time in a while.
Well, yeah. But, well, you know, mate, a friend of, what is it? An enemy of my enemy is my friend. There's a lot of that stuff going on. A lot of diplomacy is just fair weather stuff, right? So that's what's going on there, right? And it's a bit long and convoluted, but everything you see globally now, you see through the prism of America or China, right? So heaps of stuff. Trump talking about Brazil, right? I'm gonna tariff Brazil. Brazil siding with China,
Yeah.
right? So Trump is saying, right, well, I'm going to stick it to you guys until you come around and say, oh, okay, we'll be neutral or we'll come back.
So
Because
basically, BRICS are back in the firing line.
generally, yeah. But BRICS is bullshit anyway. It's just a bunch of countries that sort of talk a lot, but they don't do anything. There's always this talk about a BRICS currency, but you got to remember, if you don't want to run a deficit, someone has got to run a deficit if you want to run a surplus, right? So if you make 50 million cars, someone else has got to buy them. Well, if you've got a local car industry and you go, well, hang on, I want to protect my local car industry, well, you can't do that with free trade because China will kill you every step of the way.
Yep.
So the problem is, and again, what we're seeing now is Europe and Asia are now going, well, Jesus, hang on a second, because China's now flooding the markets with EVs. And Europe has a car industry that is central to their economy, right? But now China's flooding in vehicles to Europe. There's a picture there, Chinese automakers speed past Tesla in Europe, right? And the reason why is because they're just so cheap. But they're so cheap because they fiddle with the currency. And the Chinese government give their car makers and everybody else, semiconductors and everything, they give them all subsidies, right? Well, if you're subsidised, you can make as many cars as you like and you can sell them overseas because the free trade says, oh, well, I can buy a BYD for 10 grand. Why do I want a Corolla for 35?
But I thought Europe, especially Germany, were putting quite intense tariffs on those
That's
EVs.
what they're negotiating.
Right.
Yeah, right.
Right.
okay.
So
that hasn't happened yet.
No, it's basically it's always a matter of, well, we'll let your cars in, but you got to do this for us. So that's the negotiation stuff, right? So Europe might say, righto, we'll let your cars in. You've got to take our agricultural produce, right? That sort of stuff. So there can be a win-win there. It just depends on a lot of it, particularly Germany, Japan and China. All of them have been relying on the United States to run trade deficits, right? And everybody else has fed into that, like Vietnam, Cambodia, Bangladesh, right? Everybody, there's basically 5 deficit countries, right? The US, which is enormous,
Yeah.
Canada, the UK, New Zealand and Australia, and there's a couple of others. But we're one of the big 5 that say we'll do free trade, right? Well, the rest of the world don't agree with that. The Chinese look at us and go, we don't want your stuff. We want to make our own stuff. The Japanese do that, right? The Germans do that. And in some way, you can understand it. Hey, we make our own cars. We don't want your cars. Oh, yeah, but it's all about free trade. It's like, nah,
Well, it's worked for them for many years.
Yeah, absolutely. But that's why they're all cranky, because Trump has said, right, everyone's getting a stiff tariff, right? So that's where it's become hard now, because the Europeans are going, well, man, shit, we got 20 million cars and our market's only 10 million. We got 10 million excess cars. And the Chinese are going, man, we can build 50 million cars and the market's only 20. So Japan's saying the same thing, right? And you've got that through a whole raft of industries, right? Steel mills, copper, all the manufacturing, right? That's the problem now, because the countries have got to start to say, well, if we can't just send them into America, we've got, we employ 10,000 people in a car factory. We're going to have to get rid of 5,000 of them. Mm. So they're going through now what we went through in the 80s, right? BHP, right, was Newcastle, Steel City, right? BHP said, right, in the 80s, said, right, we're out of here, right? So there was massive collapses in manufacturing stuff. We don't make any white goods. We don't make any cars anymore, right? All of that stuff is made elsewhere, right? And so, as I said, at that time, mate, it was awful, because you had 50-year-old guys working at McDonald's.
Well, that's why our economy is held up mostly by property and the banks.
And services.
Yeah.
Absolutely. So that's why they're looking at us, that, them being the Chinese, Japanese and Germans, or Europe, are looking at us and going, man, we don't want that. Because they know what we went through, right? High unemployment, big wealth inequality, asset bubbles, right? And it's all connected, and I won't bore you with it now. But the point being that, this is when you look at the global system, this is what this is how it works.
It's hard to see that the outcome not playing out unless the US actually puts the tariffs on. Like, if they don't,
Trump will put the tariffs on.
It's
absolutely. They elected him for that stuff.
Yeah, but he's just kicking the can down the road.
Well, no, yes and no.
Is he trying? It seems like he's trying not to upset the markets too much.
No, well, yes, that's true. But the other thing is too, I think we said last week, you can't knock over a trade deal in 3 weeks, right? But what Trump is doing is shock tactics, right? Oh, I'm going to put a 3% tariff. Yeah, sure, of course you are. I'm going to put a 10% tariff. Yeah, of course you are. I'm going to put a 20% tariff. Yeah, you won't. Taco, right? Trump always chickens out. Well,
is that a thing?
Yeah, the taco trade.
Is that trademark, Steve?
Yeah, no, that's on Twitter. Right? Taco trade. Trump always chickens out.
Ridiculous.
And so, but do you see what I mean? The markets have been really buoyant. Why? Oh, well, Trump's not going to go through with it. Yes, he is. There'll be some form of tariff, and he's already getting, he's winning a lot in his trade policy, right? Because the countries are looking at it going, nah, this dude's resolute, right? And Biden had started that process. Biden tried to get the Europeans on side against China, but the Europeans weren't buying it. So that's why Trump said 50% tariffs. Have I got your attention now? Good. Here's here's the way it's going to work.
He's just a strong arm.
Absolutely. But
well,
it works.
Well, it looks to be, yeah. I mean, we'll see in August. Is it August or?
Well, no, this is going to be an ongoing process over 12 months or 2 years. Right. There'll be lots of changes. And that's why I say it's really a little bit tricky as an investor, because you've got to look at that stuff. I think I said in the week that was the video edition this morning.
Yep.
There were 4 companies that were sort of blacklisted, right? Chinese Telecom, Huawei, and a couple of others. Like, they're all Chinese companies, right? I used to have Chinese Telecom shares a few years ago, sold them. But my point being, you make an announcement like that, right? The shares go, boom. Now, let me give you an example from today, right? We're doing this on the Friday. Trump said there's a 90% export control tariff on Chinese graphite, right? Syra Resources is the leading Australian graphite producer. I think it went up 36% today.
Wow.
I missed that. What?
I looked at it on Wednesday, part of a other thing.
Why didn't you buy it?
Well, because there's
tell
a lot
the
of
future,
graphite.
really.
There's a lot of graphite companies. Secondly, Trump announced that on Thursday, not Wednesday, when I looked at it. But my point being, that's where you go. That's got nothing to do with anything other than Donald Trump's announcement, right? So if Donald Trump comes out and says X, Y, Z, you got to look at the market and those companies and go, oh man, I just went down 20%, right? Now, the flip side is Syra, right? And that's why we've been talking about rare earths. They've gone up 10% in about a month, right? Why? Because everyone's now starting to get the picture that China's got a stranglehold on rare earths and we need to do something about it.
Yep.
That's why the Pentagon bought into a bloody American rare earth producer, right? This is what we're going to get lots more of, right? Because the government is saying we need rare earths. Oh, well, the market says stuff the market, get in there
Just
and
gonna
buy
get
companies and create it, right? So we're back to this thing called economic statecraft, right? The governments will be saying, this is where the money's going, you guys.
It's controlled more by the government and less by private.
Absolutely. But see, the privates have controlled it for 30 to 40 years. So when the governments went to the privates and went, oh, we'd like to do this, they were like, yeah, you know, we're not interested.
Margins aren't good enough.
Yeah, we can get stuff out of China. We're not interested in doing that stuff. Now the government is saying, I want you to do it. The private's going, you know, we can still get it from China. And the government's now saying, oh, okay, all right. Well, the Pentagon's going to buy into your opposition. Best of luck with getting a government order, sport, right? That's the way it works, right? So, but that's why geopolitics is important.
Yeah.
At least having a base level understanding of what's going on. And
Absolutely.
that can influence your investments.
Absolutely.
100%.
And the fear and greed index is back into...
Yeah, US is back at extreme greed. The other point that was mentioned the week that was, Nvidia is now larger than Germany, the UK, or France.
Yep.
Yeah.
And what Trump delivers a $70 billion energy and AI boost.
Yeah, he's
He's investing.
That's government saying we're going to spend a lot of money, like Biden did, right? Biden did the Inflation Reduction Act and the CHIPS Act, right? TSMC has now said we're ahead of schedule in the United States with our manufacturing facility, right? That's the sort of stuff you've got to be aware of,
Yep.
right? Because I keep saying, you know, my old man said to me, in the height of the war, the Americans were building a bomber plane every day, right? And that's why I say, mate, if you go after the Americans, you want to be good because they can really pull shit together really, you know. When you've got 300 million Americans going, we're going to do it for America, they can really pull together, right? And they've got the best technology, they've got all the resources, they've got their own energy, right? They've got the skill set. They can bring all that to the table, right? That's why they want the rare earth stuff, because that connects to the military.
Yep.
And so does AI.
Absolutely. Absolutely.
I wonder where that's going to go, especially when NVIDIA is obviously... It seems like tech in general is taking a bit of a breath. Like it's been on a run for 20 years or so. It seems like the last few months it's kind of almost running out of steam. I'm sidetracking a bit.
Yeah. No, not... Well, I'm just thinking, I was looking at Microsoft in the last month, I think, is up 34%
In a month.
in a month. Or it might be 3 months. You know.
Yeah, but what is it after we had a few months of it, the market basically just collapsing on the tariffs. What is it in total? It's probably just break even.
No. That's a good point. I'd have to look. But I think it's gone up 34% in the last month.
Yeah.
And the reason why it draws my ire is because, hello, Michael in Sydney, who gets paid in company stock, right? So, you bastard, Michael.
No, look.
Yeah, I think is it 34% in a month?
Yeah, it's
All I know is it's certainly well and truly an all-time high.
It took a dump with the tariffs like everything else and then rallied hard.
At the end of April, it was at 395, and it's now at 511.
Yeah, there you go. That's 30%.
It's almost as good as Bitcoin.
But God, you never let up, you blokes. Never kick a dog while he's down. But you got to remember, Microsoft is worth like $2.5 trillion, right? 3 trillion.
Yeah, for it to do that is crazy.
Well, yeah, it's not a junior specky miner, right? That goes up 30%. You go, woohoo, right? This is one of the world's largest companies. Yeah. That's a decent move.
It's huge. Yeah, imagine buying into that a month ago.
Everyone's buying in, right? That's why it's rising. So anyway, it's just all. It seems to me to be getting a little bit ahead of itself because the earnings projections are actually falling, and the economy's rising, and the stock market's rising. It's a bit like, guys, one of us is wrong here.
Well, it's on hype. It's just people's psychology, right?
Yeah, and again, I think, well, there's still a lot of government spending going on in the US, but I think the other thing is too, and I've said this for a while, I think the markets are discounting the damage that the tariffs are going to do, or that Trump can do, right? I think everybody's decided it's taco, right? Oh, he's not going to do anything. He'll chicken out. And I don't think that's the case.
And then when it does,
blind optimism. Yeah,
I've seen the euphoric stage of the market cycle.
Well, so far beyond that.
Yeah.
There's all-time highs absolutely everywhere. At the same time, our dollar's starting to fall, unemployment's starting to rise.
Yep.
We've also hit an all-time high.
Yep. Absolutely.
Part of the reason we're celebrating. Market's
we've
done very well this week.
We've had a good week.
Market's done very well this week. Even if it hadn't, maybe we'd be celebrating.
Anyway,
market's gone up, but the dollar's gone down, so it doesn't really make a difference.
Well, it's just interesting that the unemployment rate's gone up and the markets go up, right?
Yeah,
that's why I say a lot of economic stuff you just like forget it, right? Because a lot of it doesn't correlate for a start.
Well, the stock market's not the economy. Wasn't that one of the first episodes?
Absolutely.
Yeah.
And that's the really, really important part you got to understand. That a lot of it's investor sentiment, and a lot of it is future projected. Oh, it's going to get better. All right, buy stocks. Right? It's that's why I say it's. You look at I wrote a blog post this week out tomorrow, which is about asset allocation, right, and how you rebalance and that sort of thing. But it's mainly about valuation and volatility, right? Valuation that's why we use CAPE, because it's such a good 10-year indicator, right? Well, who cares what happens next month to the purchasing managers index? I mean, the purchasing producers index.
Yeah, is it cheap overall, or
the
is it
Fed manufacturing?
Overall?
The July Fed manufacturing survey. It's like okay, and I kept I bookmarked one today to put in next week's edition. There's like 20 indicators coming out next week. Okay, well, which one's the important one? Are any of them actually important? Any of them actually correlate? Well, no, they don't. I can tell you, they don't.
It's all overridden by a long-term valuation.
Well,
anyway.
yeah, it's just and a lot of it is produced just for the sake of having stats. Oh,
yeah.
we can count this. Okay, count them.
Okay.
It's like, okay, yeah, but it's that old thing. What is it? Everything that counts can't be counted, and everything that you can count, it's not important, or something like that.
Right. Seems like a Steve special.
That seems like
give me another glass
saying.
of Pinot Noir, you bastards.
Speaking about a stat that matters, unemployment rate has ticked up.
Yes.
In Australia.
Yeah.
And that's actually really important based on the next few years.
Yeah, that one is not looking too good in Australia. But we've been talking about this for a while, right? The economy's just ticking along. So
yeah, but it looks to me like it's 15 to 24-year-olds mainly.
Yes, they're rising. But again, that's when you count the people who are underemployed.
Lazy young'uns.
Entitled.
Yeah, kids won't do anything today. That's the problem is the unemployment rate is really about 10, right? Because you've got heaps of people like we talked about last week.
They're
right?
underemployed.
Yeah, they're getting 20 hours at the coffee shop. They're living at home. They're getting $250 a week or even $500 a week. These days, that's not much to live on.
No.
When you look at everything going up and stuff. And that's,
not
a lot of them are living with free board with their mum and dad. So
Doesn't even pay for your loafers.
Not when you got a fiance like I do that does your hair every 5 days and gets her nails done.
But we love you. Don't worry
We
about
love
it.
her. Yeah, we do.
Maybe get Dan to edit that bit out.
Yeah, we'll
There's
let
no
her-
chance
yeah,
she'll
yeah.
listen to
Elle-
this.
Cut that bit out,
Elle's not listening to this.
man. She will be when I send it to her.
Love you, Dale.
So it's a bit. I think the economy's part of the thing with politics is you got to think from politics. What you do is you go, oh well, we got 2.5 years and we got a bloody 40-seat majority. Pfft, let's just take our time and see how it pans out. Like you can do that because you're not up for re-election for another 3 years, right? We just had election. Albo killed it, so they got a majority that's enormous, right? The Liberals are in disarray, so it's not as if Albo's thinking, "Oh man, I better do something because I won't get re-elected." Right? They're all going to go. Liberals are still trying to work out what the hell's going on, right? So it's it's a brutal game, mate. It's just such a brutal game, right?
It's all pointless.
And look, people are probably wondering how Steve knows so much about this stuff. You worked in that space for a long time.
Yeah, I worked in politics, yeah.
So,
Good fun.
not just some dude who spends all day on Twitter.
Yeah.
That as well, though.
Yeah.
But let's talk about the lesson of the week. It's capital cycle theory. It's an important piece that we talk about with people that come on board and become a client. But it's something that, Steve, I think you wanted to share of basically how the money works through the market and what it does.
It just basically, every industry has what they call as a capital cycle, right? So the reason I've got NVIDIA there is...
The wine's talking.
Yeah, the wine's kicking in, boys. Harry, finish it up. The reason why I've got NVIDIA there is because AI became a thing, I don't know, 18 months ago?
It became like a hype.
Yeah.
Like a buzzword.
Right.
I think it's been a thing for a
while.
Yeah, more than 18 months.
If people are having trouble following this, there's a picture in the week that was. So come on board and have a look at it. It's really important because what it shows you is, you get a cycle, right? And you get predictable parts. So what do you get with AI? Okay, media buzz on sector potential. Hello? Mm-hmm. It's going to take everybody's job and it's going to be huge and, blah, 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 right? Mm-hmm. Okay. Initial capital inflows to accommodate rising demand, right? Sam, what's his name? Altman, right? Is
Huge
the
investor inflows.
open AI guy, right? Yep. So they're all out there raising capital. How do you raise capital? Man, this thing, we got the best AI system ever, right? Oh my God. We want 10 billion. Sure, here it is, right? Okay. Speculation about growth potential. Hello, AI is going to take over the world, right? Just think, this is what went on with the internet, right? Growing capital inflows to catch up to growing demand, okay? Now, here's the next one. Peak capital expenditure, lots of hype, tick, lots of marketing, tick, halo effect. Okay, now a halo effect is, remember Uber and Travis Kalanick, right? And I've talked about this before. Couldn't do any wrong. Travis is a genius, is a legend, right? Then they got rid of him.
Yeah.
Right? That other idiot that worked for WeWork, Adam Newman, right? Fucking shyster, right? Got rid of him. But they're all the poster boys. Elon Musk is a poster boy, right? And this one is Jensen Huang. He's the CEO of NVIDIA, poster boy, right? So Sam Altman, OpenAI, right? Poster boy. They're the halo effect guys, right? Acquisitions and expansions, haven't got there yet. IPO new companies, haven't got there yet. But importantly, profits decline. Now, I can tell you that AI is not as good as they think it is. So, in other words, it's not living up to the hype.
What the marketing is selling.
Yes, right? So then you get that's the sort of peak. Then you get the waterfall, right? Initial decline on capital cuts, rumours of some struggling, right? So we're going to get this, right? Growth slows, investors start selling, analysts reassess companies. Maybe NVIDIA's not worth 85 zillion, it's only worth, 42, right? That sort of stuff. Mergers, acquisitions, declines continue, media stories turn dire. Okay, so we're definitely not there yet. Bankruptcies, time to start looking for survivors. Down the bottom, blame, industry is dead, quote unquote, investors flee the sector. Okay, that's the capital cycle.
So if you map the dot-com bubble over that, over 2000, 2001, that's when you lost if there's 10,000 tech companies, in the end there was 1,000.
That's exactly right. Right, and they burned all that capital.
Yeah.
But
the survivors are still here today.
Yes.
Yeah.
Now, here's the point for investors. What you want to do is wait for the blow up, see who survives, then buy their shares.
Yeah.
Right? Because then everyone's pessimistic. Oh, it's bullshit. It's never going to do anything. But there'll be one or two or maybe three companies that make money.
Yeah.
Right? But now you're getting them when people say, oh, my God, I bought NVIDIA at $400 and now it's like, $25. That's when you buy it.
Yep.
Right? Because that's when it's hated. It's really cheap. It's dumped all the excess. And that's when you can say it's a survivor. And that's and the reason
they become your Apples and your Microsofts.
That's
and
exactly
the ones
right,
that
Tom.
Do really well for a long time.
Yeah.
Good dividends.
And that's why it's important, because at the moment, from 2009, we've been through AI, semiconductors, what's Musk, Tesla, EVs, solar energy, right? Green technology. Bitcoin is part of this, right? NFTs, right? The what do they call them? Those
Non-fungible.
The non-fungibles.
tokens, yeah. I saw one the other day that was bought for $6 million. That's now worth like $125. Right?
Did you buy it?
No.
Now's the time to buy.
Yeah, what a picture on the internet. Yeah, righto. But that's what I mean, right?
It's a pixelated monkey.
It's a really, like, you look at that and go, man, that's such a dumb idea. What? Some dude just bought it for $60 million.
That's the only
tax
one.
write-off.
So, but
I
again,
screenshot
it's only when you calm down where you go, oh man, what was I thinking?
Yeah.
Because you realise that you got caught in a hype bubble, right?
There's a bit of that. NVIDIA at 4 trillion will do that.
Well, let's close it off on the cheap win. So this is actually quite interesting. So we're going up. You got somewhere to be, Steve? You're
No,
looking
mate,
at the time.
you guys are the bloody time Nazis. You know me, I'll talk underwater.
So we've got
Couple of wines, I'll talk at the top of a mountain too.
something that we talk about a bit. So with market cycles, the cheap markets have generally lower drawdowns.
Yes.
But they will still draw down if someone like the US has a bad couple of years.
Yes.
I remember you saying, I think it was a couple of weeks ago, to be careful with I think it was Brazil.
Yeah, what I'm saying is when the US is expensive, if you look at asset returns, if you look at stock returns, when the US sinks,
everything goes.
We all go,
Yeah.
right? There might be one or two that don't, but we generally, with a cape at 38, if the US, you know what hits the fan, there's going to be a lot of us who are scrambling for the exits, right? Okay, but if Brazil is on a cape of 9, it's already cheap. It's already hated and it's already pessimistic. So it may have a drawdown, but the US might fall 50, right? Brazil might fall 15 or 20, right? Because it's already hated. And what history shows is the cheaper you are, the less you really fall, right? And again, because you're already undervalued, you might even get cheaper. But to be quite honest, you'd be going, man, this is great.
Yeah, just keep
right? Because the US is at 39 and it's got to get all the way back to, 17. That's where it's really important to understand about asset allocation and correlation with the United States, right? Yeah. Rebalancing, diversification, blah, blah, blah. But I said last week I'd put this chart in, right? Because, again, lots of people are saying, well, I know Brazil's cheap, Steve, and you're talking about it, and you're talking about Turkey and, Spain and other areas, but the US is at 38, right? So how much do I put in Brazil if it's cheap, but the US is really expensive, right? And again, I always say, well, just be a little bit more conservative because if it becomes cheaper, well, you should be happier about
You should have money. You should have more money to.
Well, you should have more money, but you should also be saying, great, I bought it at $1. Now it's at 70 cents. That means my average price will be 85.
Yeah. But the problem is everyone goes all in.
Yes.
Well,
Sorry, when I say everyone, I'm
people
generalizing.
who don't do total money management.
Yeah. But like most people off the rip, if they got $10,000 to buy a stock, that's how much they're buying.
Generally, yeah.
And then they go, oh, it's down 20% or 30%. And they're
I've
waiting
got
for it to catch up.
$6.50 to, buy new stock.
100%. But, the more we go on about this, the more it kind of stands out that asset allocation is kind of how you make your money and rebalancing.
Yes.
Because like you could buy the same stock at the same time. In that example there, they might have bought Brazil cheap, right? But they've gone all in, they've dropped. Whereas if you're doing the same thing, you might have entered at the same price, but because of how you've deployed your money, you'll be in profit quicker. And that'll be the difference between...
Yeah. You've got to, like we talked about with the capital cycle theory, right? You've got to say, and we do this in the risk hierarchy, will it survive? Yes, it will. Why? Because it's a country ETF. Mm-hmm. Now, it may blow up, okay, like Russia, right? Okay, but they're low probability events. Yeah. Okay, so it'll survive. All right, so, and I said this in the blog post, if you had 10 grand, right, and I said, all right, look, put 7 in Brazil, now you've got 3 grand. You come back to me and you go, oh man, Brazil's gone from 7 to 6. Right? So you can say, all right, well, first of all, you've got the cash there. That's what it's there for. Secondly, you might say, oh, yeah, but I don't know how much to rebalance. Right? So I'll say to you, all right, Tom, well, what do you got? 3 grand. Okay, well, what about over 3 years you put in $1,000 every year? Will it stay down for 3 years? It could do. Okay, it could do. Unlikely, but it could do, right? You might say to me, oh, Steve, no, I reckon 2 years tops. Okay, well, that's $1,500 to rebalance, right? And so, again, what you're doing is then going back to history and going, okay, has Brazil ever been down for 4 years in a row? No. It's actually pretty close. I think it's about 3. But my point being, go back to history and say, has Thailand ever fallen for 3 years in a row? Never. Okay. And what's happened... Go and look at the Quilter returns and look at the times that countries are negative. Because I can tell you, the next year or the year after, they generally do really, really well.
Is it Templeton that has that chart of CAPE versus how much your allocation should be? Is that the Templeton
it's not
chart?
CAPE, but it's a normal PE.
Normal PE.
But I sort of CAPE-ize it.
Yeah, but that's also a good little reference.
Yes,
if
absolutely.
If the CAPE's at 9, then you should be 70% invested. Or
yes.
it might be.
Yeah. The standard is 60-40.
Yeah. Right?
If the current PE is, quote, average, you have 60 in stocks and 40 in bonds.
Yeah.
And Templeton said if it's 20% below the normal PE, then you should move it up to about, say, 75% in stocks.
So even if you use something as simple as that to rebalance, it's...
Absolutely.
Well, it's such a good edge.
Yeah. And that's actually all you're doing. What you're doing is saying, well, if it's cheaper, I should buy more. But what happens is a lot of people get fearful, right, because the price has dropped. Now, if you bought a junior specky miner, then, you might be throwing good money after bad. But if you buy a country ETF, have a look at them over 15 or 10, 15 years, they will have a positive average return, right, which means you could say, stuff this, I'm just going to leave it. You could come back in 5 years and you could be up 20%. Right? So it's how to think about asset allocation and rebalancing.
Yes, great. All right, well, let's wrap it up there before Tom falls asleep. Cheers,
awesome.
everyone.
Thank you so much.
See you next week.
Also worth noting, thank you to everyone who liked the podcast on Spotify.
Good shout, Thomas.
Anyone who enjoyed today, please comment. It helps so much.
And if you don't, Tom's going to beg next week.
I will beg, and the week that was free too. So the charts that Steve referenced, jump on the website, subscribe for free. You can see what we're talking about.
Cheers. Thanks, mate.
Cheers.
As always, remember, we don't provide financial advice.